Welcome to Mistine Deep Dive. Today, I am breaking down MAGI, the Roundhill Magnificent 7 Covered Call ETF. This fund is built for investors who want exposure to the largest and most influential tech companies, the so-called Magnificent 7, while earning weekly income by using a covered call strategy. Let's unpack what that means, how it works, and whether it might fit your portfolio. What is MAGI? MAGI is a fund that owns shares in another ETF called MAGS. MAGS offers equal exposure to the Magnificent 7 stocks such as Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta, and Tesla. On top of that, MAGI sells weekly call options on those shares. By selling the rights for someone else to buy the ETF at a fixed price, MAGI collects premiums and distributes that income weekly. This allows investors to earn a steady income stream while staying connected to the tech giants. How MAGI generates income. Each week, MAGI sells call options on the shares it owns through MAGS. If someone pays the premium to buy the ETF at a certain price, MAGI keeps that premium regardless of whether the option is exercised. That premium becomes income that is passed on to shareholders through weekly distributions. When did it launch and how big is it now? MAGI began trading on the Cboe BZX exchange in late April of the year 2025. It launched alongside a broad lineup of other annual and weekly covered call ETFs from Roundhill. At launch, its fee structure was gross 1.28% and net 0.99%. That means after waivers, the fund charges less than before waivers. Why this matters. Launching on Cboe adds trading flexibility. AUM in the broader Magnificent 7 lineup already exceeds $1.7 billion, showing that investors are drawn to this coverage of top tech companies. MAGI is the first with weekly income from that strategy, aimed at income-minded investors. Income and yield profile. MAGI targets weekly income distributions from the call premiums. Like many covered call ETFs, part of the weekly income may be a return of capital. That can reduce the fund's net asset value temporarily, but defers taxes until you sell. Precious details about exact yield are not yet fully established, but you can expect a meaningful income stream, possibly high single digits or low double digits annualized, depending on implied option volatility levels, risk profile. Covered call premiums help cushion small market drops, but they cap growth. If the Magnificent 7 rallies strongly, MAGI will not fully capture those gains. It also uses weekly options, which adds operational and execution risk. Like other weekly income ETFs, MAGI has limited history, making it less battle-tested. Drawdown history. In its first weeks, MAGI experienced a maximum drawdown of just above 2.2%, recovering within 2 trading days. That shows the fund can bounce back quickly, though the sample size is small. Covered call mechanics. Covered call strategies work best in neutral to slightly rising markets. They earn premiums in return for giving up upside above the strike price. Roundhill's weekly pay ETFs aim to simplify this for investors, bundling the covered calls into convenient weekly distributions, costs, and structure. MAGI charges a net fee under 1% annually. That covers fund operations, options management, and distribution services. It is more expensive than plain index funds, but typical for actively managed income ETFs who might want MAGI. This fund suits investors seeking regular income from top tech holdings who do not need full participation in growth. You get access to the Magnificent 7 and weekly cash flow. It may also help smooth returns during mild market declines. Risks listed clearly. You will not capture full upside during strong bull markets. The fund could underperform in rapidly rising markets. Weekly option execution and implied volatility make income uneven week to week. Return of capital payments can reduce NAV while deferring taxes. Past history is short, so future resilience is untested. My meter rating. Income 9 out of 10, risk 7 out of 10, simplicity 5 out of 10, long-term safety 6 out of 10, upside potential 6 out of 10, total score 6.6 out of 10. Is MAGI right for you? MAGI is worth considering if you like weekly income and tech exposure, but want less volatility than outright stocks. It may fit into a portfolio as an income-tilted position. But if you want full growth or simplicity, plain index funds may serve better. Final thoughts. MAGI delivers a novel blend, tech stock exposure plus weekly cash via covered calls. It is professionally built and suits income seekers. But it forfeits upside and is structurally complex. Know what you're investing in and consider your goals before jumping in. If you have any videos you'd like me to cover, say it in the comments below and I will break it down in plain English.